Hello, fellow compounders. Today, Saturday, February 25th, 2023, is a very special day. It's the day Warren Buffett releases his annual letter to Berkshire Hathaway shareholders. We get to learn how Berkshire did last year in 2022, and we will gain some nuggets of wisdom from Warren Buffett. In this video, I'll be sharing the key takeaways I got from this letter. This video is for educational purposes only and should not be considered financial advice. I am not your financial advisor, and you are responsible for your own financial decisions. Warren Buffett is one of the richest people in the world, and he is considered the greatest investor of all time. He is the CEO of Berkshire Hathaway, and he has been for the last 58 years. He has been educating investors through the letter he writes every year to the shareholders of Berkshire. He has been writing these letters since 1965. We are very fortunate to have this treasure of writings from Warren. He has never written a book, so these letters are the closest thing to a book we'll get from him. He is 92 years old currently. Here are the 10 takeaways from the 2022 letter that was published today. Number 1, the satisfactory results of Berkshire's performance are the outcome of a dozen truly good decisions. Buffett goes on to provide 2 examples of good investment decisions: his investments in Coke and American Express. These are great examples of dividend growth investing, which is one of the favorite topics of our channel. Berkshire bought about $1.3 billion worth of Coke shares in 1994, and at the time those shares paid Berkshire $75 million in dividends, or about a 5.8% yield. Today, those shares pay out a dividend of $704 million, which is about a 54% yield on the original cost. Same story happened with American Express. In 1995, Berkshire completed the purchase of $1.3 billion of American Express. Pure coincidence, that's the same number as the Coke purchase. And at the time, it was receiving $41 million in dividends, about 3.2% dividend yield. Currently, it receives $302 million in dividends, or a 23.3% yield on cost. And he goes on to give the example that if Berkshire had invested that $1.3 billion in a 30-year bond instead of the stocks in Coke and American Express, it would have received around $80 million in annual interest. And the capital returned at maturity, when the bonds expired, would have been the same $1.3 billion. However, the Coke and American Express positions are now worth, listen to this, $25 billion and $22 billion respectively. A huge difference from the 30-year bond. So here we see the power of dividend growth investing. Takeaway number 2. Berkshire's performance in 2022 was good. It set a record operating earnings of $30.8 billion. Takeaway number 3. As for investments in 2022, he mentioned the purchase of Allegheny Corporation, a property and casualty insurance which helped increase Berkshire's float from $147 billion to $164 billion. Number 4. Berkshire repurchased 1.2% of the company's outstanding shares. He also explained the benefits of buybacks, which we covered in a previous video. Here's the link. He went on to say that, quote, "When you are told that all repurchases are harmful to shareholders or to the country, or particularly beneficial to CEOs, you are listening to either an economic illiterate or a silver-tongued demagogue." Takeaway number 5. Berkshire now enjoys major ownership in an unmatched collection of huge diversified businesses. Berkshire owns 10 of the largest companies in the United States. Berkshire's past 58 years goes something like this. In 1965, Berkshire is a one-trick pony, owner of a doomed New England textile operation. In 1967, it buys National Indemnity and shifts resources towards insurance and other non-textile operations. And it arrives into 2023 as a product of 1. Continuous savings by the owners, that is, by their retained earnings. 2. The power of compounding. 3. Avoidance of major mistakes. And 4. The American tailwind. So, out of all publicly traded businesses in the United States, around 5,000 or so, the S&P 500 is the elite collection of large, well-known American companies. The 500 businesses in aggregate earned $1.8 trillion in 2021. Of those 500 companies, only 128 of them earned $3 billion or more. At year-end 2022, Berkshire was the largest owner of 8 of those giants of the S&P 500. American Express, Bank of America, Chevron, Coca-Cola, HP, Moody's, Occidental Petroleum, and Paramount Global. In addition, it owns 100% of Burlington Northern Santa Fe and 92% of Berkshire Energy, each with earnings above $3 billion. BNSF earned $5.9 billion and Berkshire Energy earned $4.3 billion. If these companies were public, they would be in the S&P 500. Hence, Berkshire owns 10 of the largest companies in the United States, leaving it widely aligned with the economic future of the United States. Takeaway 6. Never bet against America. Buffett said, quote, "I have been investing for 80 years, more than a third of our country's lifetime, and I have yet to see a time when it made sense to make a long-term bet against America. And I doubt very much that any reader of this letter will have a different experience in the future." Takeaway 7. He mentions his commitment of keeping a good balance sheet. Berkshire will always hold a boatload of cash and U.S. Treasury bills, along with a wide array of businesses. Takeaway number 8. The future CEOs of Berkshire will have a significant part of their net worth in Berkshire Hathaway shares, bought with their own money. He also hints at continuing the policy of retaining earnings and paying no dividends in this passage. Quote, "Our shareholders will continue to save and prosper by retaining earnings." At Berkshire, there will be no finish line. Takeaway number 9. Berkshire pulls its weight when paying taxes. During the decade finishing 2021, the U.S. Treasury collected $32.3 trillion in taxes, and Berkshire paid $32 billion in taxes during that decade, or about 0.1% of all U.S. taxes collected in that decade. This means that if there were 1,000 taxpayers in the United States matching Berkshire's payments, no other business nor any of the 131 million households would have needed to pay any taxes to the federal government. Berkshire is paying its fair share of taxes. So, he said, individuals who own Berkshire can unequivocally state, "I gave at the office." And takeaway number 10, Buffett ends by sharing 15 pearls of wisdom from Charlie Munger. Number 1, the world is full of foolish gamblers, and they will not do as well as the patient investor. Number 2, if you don't see the world the way it is, it's like judging something through a distorted lens. 3, all I want to know is where I'm going to die, so I'll never go there. And a related thought is, early on, write your desired obituary and then behave accordingly. Number 4, if you don't care whether you're rational or not, you won't work on it. Then you will stay irrational and get lousy results. 5, patience can be learned. Having a long-term attention span and the ability to concentrate on one thing for a long time is a huge advantage. 6, you can learn a lot from dead people. Read of the deceased you admire and detest. 7, don't bail away in a sinking boat if you can swim away in one that's seaworthy. 8, a great company keeps working after you are not. A mediocre company won't do that. 9, Warren and I don't focus on the fraud of the market. We seek out good long-term investments and stubbornly hold them for a long time. 10, Ben Graham said, "Day to day, the stock market is a voting machine. In the long term, it's a weighing machine. If you keep making something more valuable, then some wise person is going to notice it and start buying." 11, There's no such thing as 100% shorting when investing. Thus, the use of leverage is dangerous. A string of wonderful numbers times 0 will always equal 0, so don't count on getting rich twice. 12. You don't, however, need to own a lot of things to get rich. 13. You have to keep learning if you want to become a great investor. When the world changes, you must change. 14. Warren and I hated railroad stocks for decades, but the world changed and finally the country had 4 huge railroads of vital importance to the American economy. We were slow to recognize the change, but better late than never. And 15. Warren, think about it. You're smart and I am right. So there you have it, the 10 key takeaways that I found in this letter. This year's annual meeting is going to be on Saturday, May 6, 2023. I'll be going again this year. If you are also planning to go, let me know so we can meet at the annual meeting. Thanks for watching, and remember to always be compounding.